This is our Forex blog for August 3rd, 2012, and this is also a must-watch video. Most days we go over the same stuff every day. You can see how our software did that day, but today we're going to go over something new that is going to be in our next release of the software. I have been using this for the last month to trade, but I recently found out that many traders are not using our value areas and the point of control, getting that data from the previous day's data or the previous week's data, and whether people only have one monitor or they have enough monitors but they're, for whatever reason too lazy to do it, people aren't using these levels. So first, let me just showcase what this actually is. If you bring up a chart, and this is probably why most people are not using it. Let's say a regular chart like this. I'm going to hit period D to change it to a daily chart. And then I'm going to go to Add Studies in Volume Profile. And I'm going to get 10 days of data. What this does is downloads tick data, and I already have it in memory. And you can see, and let me change the colors on here so you can see it better. I like to make anytime I'm using the volume profile, I make the bars very much disappear into the background. So you can see yesterday's point of control of the Eurodollars right here. That's where the most activity happened for the whole day, 22.46. Obviously today above that level you're looking to buy, below that level you're looking to sell. And then 68% of yesterday's activity happened inside this value area. And the same thing applies to the weekly, period W. Last week's value area is right here, and it's not a coincidence that this week's low is at that level. The previous week's point of control, which is where most activity happened, is unbelievable support resistance. And unlike pivots and other tools which do work, and they work very well, this is actually real support resistance. This is where real people have real positions, and and obviously the small traders have no impact on the market. These are governments, corporations, giant trading firms that have billions of dollars of positions at these levels, and they have the money to defend them. If enough countries and big traders want this level to be the low, then this week you can see that was the low. There's tons of buy orders there. And when these levels get broken, a lot of times stops are on just a few pips on the other side of them. A few pips above the upper value level, a few pips underneath here, a few pips underneath here. So in other words, when these things get penetrated, there tend to be 20 to 50 pip moves, which is really what us as intraday traders want. If you only have an hour, hour and a half today to trade, and that's my goal, trade about an hour and a half a day. I don't like to trade too much more than that, just because I run the company and I have a son who's turning 3 this month. Spent a lot of time during the day playing with him, and I've worked hard in the past, so that I don't really have to work too hard today. I'm fortunate in that way, but I do trade most days, and I want to get 20, 30 pips in an hour, hour and a half, and be done. I quit. I don't need to have 50 pip days. Sometimes, I'm lucky enough to find those. But the point is, the value areas and point of control work really well. And so this is going to be released hopefully today, and you'll find it under Add Script, FX Value Areas, and you have the color for the upper value area, lower value area in the middle, point of control for both the daily, D or W, weekly, and then the color you want for the padding. And this is so it stands out from all the other support resistance areas on your chart. How many pixels wide you want your daily one to be, the weekly one, and how many pips padding you want on the daily and weekly. These are the defaults, but you can adjust them however you want. So you can see, as I'm going to go through some of these currencies now, you can see the dollar Swiss found some support at the upper value area of yesterday, which means basically from this green area here to the bottom one, the market spent most of its time in that range. And this is the price that most, had the most trading volume yesterday. And you can see the price hovered around there for a very long time, and as well today. Let's look at some of the other ones. Eurodollar. You can see yesterday's lower value area. When it went above that, it exploded up. Found resistance here at the point of control of yesterday. Went above that, found resistance at last week's value point high, and then came up and found resistance at yesterday's value point high. Came back down and found support, bounced between last week's high and this, and then took off. Notice again yesterday's value level high, which I'll put back on here on the daily chart. You can see that price is right here around 22.98, 2300. And of course, it's having a hard time getting above that. Once it gets above that, it's pretty much more likely to trend up, and you can see that's exactly what it did. Let's look at some of the other currencies that we have here. Here's the euro yen. It was underneath yesterday's value level low, so it's more likely to go down once it goes back into range. Typically, you have a little bit of choppiness until it goes above the point of control right here. Came back down and found resistance. Or, I'm sorry, support. Resistance, once broken, becomes support. This is last week's value level high, which is basically it spent 68% of the time in prices were traded between this level high and the low down here. I have this chart set to showcase more than what you can actually see on it, just so you can see some of the other levels, and you can also see how well these work. When value areas or the high of a value area or low of a value area gets broken, typically you'll have a retest where it comes down, and if it finds support here, you can buy, and typically it's going to go up another 20 or 40 pips. What's really nice about this is that these value areas are oftentimes below where the high was. As you can see, yesterday's value area high is right here around 2300. Yesterday's high is all the way up here at 2400. So if a lot of traders wait for the previous day's high or low to get broken before they get into trades, well, guess what? Today it never broke it. Or what if yesterday's high was right here at 2365? Wouldn't you like to be in a breakout trade 65 pips early? And that's why the value areas are so incredibly useful. Let's look at some of the other ones on here. Dollar Swiss, value area high. When it came back down, this is last week's low value area, so it's breaking the low of last week, and it's also the point of control for yesterday. It came back down, found yesterday's value area low and found support, came back up, wasn't able to get above this resistance. Support areas once broken become resistance. They're selling here. This area was support again. And again, as I scroll back, notice where yesterday's low is. It's all the way down here. You can get into a breakout trade right here at 97.68, and it went all the way down to 9700. 68 pip move that was pretty much, in my opinion, in the way I've been trading it, telegraphed by having these value areas. So again, I realize most people are lazy, or for whatever reason they don't use the daily or weekly charts and they don't put the value areas on here. So I'm going to spend 10-15 minutes of my night putting these levels on our web server, and then our software will download those levels and display them on here. And you can set these to whatever chart colors you want. I like to have the weekly ones be a little bit bigger. You can see 10 pixels wide, 3 pixels for the yesterdays, and then you can select how many pixels padding. So this stands out from all the other support resistance areas that only have one color. Anytime you see a line that has gray or whatever other color padding you want above and below it, you know that it's very significant and it's real support resistance. It is not fake. Let's look at some of the other currencies here. Yesterday's value area high and low. Once this area got broken, notice how it acted as support here. Once it went underneath there, it acted as resistance. Came down here, found support. Once support's broken, it becomes resistance. Great place to get short. And again, if you scroll back and look yesterday, the low of the day was down here at around 1.0000. And so you got into this short right here at 27 and had an extra 27 pips. If you sold the low of yesterday at, let's say, the whole number here, it only went down 20 pips. But if you sold up here, you made 45 pips on that trade. I'd much rather make 45 pips than 20 pips or 15 pips. That's just my own personal preference. Notice this trade here. We're above, you can see automatically, or we're above last week's value area high. So last week probably went up, and this week's continuing. It's stuck in between the value area of yesterday. And when it breaks above there, you have a nice, beautiful trade up, let's say 78.15 all the way up to 84. It's a huge run, and this happened to be really close to yesterday's high in this instance. It's all where traders trade at. 76.26 maybe is yesterday's high, but you still got into that trade 10, 12, 13 pips earlier here by using the value areas versus waiting for the previous day's high to get broken before you you buy. All right, that's incredibly useful. Let's look at the pound yen. Value area, the low, the point of control, which is where most activity happened yesterday, and the high. And again, when it broke through this high the second time, just took off. Notice the high of the day is all the way up here at 122.58. You're able to buy a breakout right here. And let's say the market came up here and you bought the first one, right, at 122.03. It went up about 9 pips before coming down, so you should have only lost maybe 4 or 5 pips on that trade. The second trade you got in at 122, and you probably would have got out here at 122.50, which is last week's value area high. And typically the weekly ones are going to be major resistance, so the market went sideways there almost an hour, and when it broke out you could have bought. Went up about 15, 20 pips, pulled back, great place to buy a pullback. And you always want to use our fib targets as well for when to get out of trades at. Put your fib level tool on here and draw it from the last swing, and that's going to give you an idea of where to take profits. If it comes up really close to that level, you want to get out. So I'm showcasing this in today's class. Obviously our older methods continue to work on a daily basis using the currency meter. Our main method is finding the strong ones and the weak ones and buy the strong versus the weak. So we have the real-time trend, 15-minute trend, hourly trend, daily, weekly, monthly. The yen's extremely weak. You had a CAD that's very strong. The Australian is very strong. So you would have been focusing on looking for Australian yen buys, for instance. And if that's the case and you're watching this to be buying, you probably wouldn't want to buy initially right here because you know that this level here is going to be major resistance. You might have bought this breakout right here at 82.35 and it went up to 42. So that's enough to move your stop up, and you might have only lost 5 pips, or maybe you made 3 or 4 pips. You bought again here, maybe made 3 or 4 pips. The third trade here, 82.36, took off, and you made 60, 65 pips. So if you lose 5 pips, you lose 8 pips, and then you make 60 pips, guess what? You're only 1 out of 3 right, but you made money. And earlier in the day, when you can see the price, it's above yesterday's value area, and it's likely to work its way to the point of control. This is where most activity happened the previous day. Anytime you see a level get broken like this, and then price can't come back underneath it, it's usually only a matter of time before the breakout happens and the market goes up. So you just have to, be patient and wait for those kind of trades. The New Zealand, also very strong. The Swiss, very strong. The Euro, very strong. So let's look at the Euro Yen. Super strong Euro, super weak Yen. This one, it was in yesterday's value area. It came in from underneath it. When it's underneath the low of yesterday, it's likely to go down, found resistance there. But the fact that it didn't means, guess what? It's not weak enough today to continue yesterday's downtrend. So, this area right here is the previous week's value area high. It's likely to be resistance, and it was for 30 minutes. If it breaks above there, the next major resistance is all the way up here at 96.10. So you can buy right here around 85 and make 25 pips. And you might have bought right here and lost on that one. You came back down and found support. You got in, and then you're in this trade right here at 85, let's say 90, and it absolutely exploded on you. And this is a good profit target right here, which it just absolutely penetrated yesterday's value area high. Once it's above here, if you see a retest like this where it can't get back underneath it, how many times did you see that in today's blog post? Pretty much 100% of the time that these get broken. When it comes back and finds support here, it's going to continue trending up. And because this went up, I'm going to draw my fibs on this last little wave right from here to here. Hit the Control F where you can hit the T drawing tool. And guess what? It went right to the fib target this time. So you're in that trade, maybe right here at 97, and you made 37 pips on that. And that's it. Use our currency meter. And I'm not even today showing you our range charts or statistical multi-currency comparison charts. You could actually just trade using our currency meter and watching how these interact with support resistance. And if a level gets broken and it comes back down and retests it, it's going to be support like it is right here and like it is right here. And now you know why I'm willing to spend 10-15 minutes putting these levels up on our server every night, so that you can have these on your charts without doing any work, and I want to make sure that you use them our business model where we give our software away for free depends on traders making a lot of money because they tend to trade a lot more. 90% of our revenue comes from the top 10% of our traders, and they trade, hundreds of lots a month versus, new traders trading mini lots and micro lots.